It's nice to see that we didn't have this big sell-off. If you look back at all of our trading sessions for the last month or so, tremendous amount of volatility, three-digit moves every single day, multiple percentage moves. Good to see that we didn't have that sell-off today. I think everyone is anticipating information coming out of G20, what's going to happen there, what's Trump going to say, what are the meetings really going to add to this. So before making any decisions, I think investors somewhat pulled away from this market today, letting it trade on its own. Next week is definitely going to be important. We're going to have Sunday night into Monday information coming out of the G20. And then at the end of the week, we're going to have jobs numbers. In between there, some more Fed comments will come out, and that's going to really dictate our markets. December is somewhat of a short month. We have really only 3 trading weeks in December. December 21st is a large end of the year rebalance. So after that, I don't think we're going to see a lot of trading activity. So a lot of it is going to condense into the next 3 weeks. Next week should be important.
So, Kristina, the 2 big fear factors for the market over the last 10-week sell-off or so have been the Fed and the trade war with China. Where do we stand on both of those issues today?
So one risk has abated a bit, and that's the Fed, because the FOMC minutes today just confirmed what we heard from Jay Powell yesterday, that the Fed may be likely to take its foot off the accelerator in 2019. But another risk is actually growing, and that is trade. The news that Pete Navarro is coming to dinner with President Trump and President Xi should give us all pause and assume that the situation will get worse. It's almost like having your mother-in-law come to your divorce settlement negotiations. It's unlikely to be an amicable outcome.
That's amazing.
Very, very good metaphor. Kate, what's your view on that? Even if this doesn't promise to be the easiest negotiation ever, are at least the expectations fairly low coming into it?
I think the expectations are very low. I don't think it's quite as bad as having your mother-in-law at your divorce proceedings, but I do like that analogy. I think overall, both sides are still trying to position for the longer term and are trying not to cave too soon. And that's why I think not only don't we get a lot out of the G20 meetings, but that when we do get to negotiations sometime next year, they're long, they're protracted, and there are a lot of struggles and stumbles along the way. So more volatility there, but I think the market may be relieved if there's nothing bad coming out, especially with the possibility being that there could be basically more rhetoric and more escalation from the G20.
How's the market set up?
I mean, I think a non-event coming out of this weekend would be the best thing our market can really get. I mean, we've seen so many different headlines really move our market, showing us how fragile this market is to all the different geopolitical headlines that we get. So a non-event, I think, would make investors feel a little bit easier.
Kristina, how are you positioned going into the final month of the year? I mean, Jonathan's saying it's a slightly shortened week. Is it worth trying to chase any remaining gains that might be out there?
Well, you know, we take a long-term perspective, but for those who are tactical, this is a time to essentially stay put and have a little dry powder on the sidelines, because opportunities certainly present themselves. We saw that with the tech sell-off, and so I expect the same occurrences with more volatility in the coming weeks.
Kate, wanted to ask about the banks in particular. They're the worst performing group today. I mean, earlier we saw the 10-year yield drop to the lowest level since September. Now everyone's singing a new dovish tune on the Fed. Does that mean the financials are a no-go?
No, I actually think the financials are attractive, because I think in the same way that investors really read way too much into Powell's comments that we were below the neutral zone and that there was more to go, they're probably overreacting on the positive side today that the Fed's not likely to continue raising rates and that we have fewer in the pipeline. I think we could easily see the Fed continue to be nuanced and continue to aim at that neutral rate. That means we're likely to get back and forth. And I think the financials benefit whenever we see a pickup in long-term interest rates and the market begins to anticipate more rate hikes as opposed to fewer like it's doing today.
Jonathan, just quickly, when you sent us your notes about an hour or two ago, you were saying the next resistance to the upside, 2750 on the S&P, we're pretty much exactly there at the moment. So is that a bullish sign if we close above that?
I think so. I mean, that was an hour ago and about 10 points lower at this point. But we got through it earlier in the month and stayed above there for a short period of time, came back down, tried to get through again about a week and a half ago, couldn't get there. If we close above here, I think 2750 is a good level.